Hello, everyone. This is chapter 7, which is about inventory. So let me go ahead and share my screen. And I'm going to start my PowerPoint. Here we go. Okay, in chapter 7, we're going to learn about how to process the inventory, inventory coming in and inventory going out and those type of things. Part of that is developing a products and services list. And so we'll be going over the different categories that you'll have in your products and services, which would be inventory, non-inventory, service, and bundle. As far as transactions, we're going to start out by creating a purchase order. And that's just us ordering something from our vendor. Excuse me. And then when we receive the bill from our vendor, we'll enter it as a liability. And probably 30 days later, we'll end up paying the bills. So these three are dealing with vendors and accounts payable. And the next section is on customers and accounts receivable. So we'll take that inventory, those products, and we'll sell them to our customers. And then we'll invoice our customers. And if we use the invoice, that means that they're going to pay us later. And so 30 days later, they will pay us. And so we'll record them paying us through the form receive payment. And of course, if we use this undeposited funds account that now we call payments to deposit, we'll need a separate bank deposit. We don't have to do that if we deposit, in our form, our receive payment form, we go ahead and say it's going to be right into our checking account. And I think in this chapter, we do that. Okay, so to put things into perspective, we're dealing with transactions. We're going to start out with vendors and expenses. So again, we'll order our inventory, we'll receive the inventory, we'll enter the bill, and then we'll pay the bill. That's on the vendor accounts payable side. And then on the customer accounts receivable sales side, we'll create the invoice, which is a bill to our customer, receive payments from those invoices, and then if we need to, we record the deposit. Okay, inventory records are required to account for products we purchase from vendors and then resale to customers. Okay, so what we're going to do, we're going to purchase products from our vendor. Now they're at our company, and then we'll take those products and sell them to our customers. Now, as far as the order we do in accounting, we're going to create a purchase order, which is telling the vendor that we want them to give us this inventory, right? So it's just an order that they'll fill. Now, once they do, and we receive the merchandise, the vendors will bill us, and then we'll eventually pay the bill. Okay, so now we have those goods, the inventory. Now we'll resell that inventory to our customers. We'll invoice them, and that means that they owe us money. They're going to pay us later. So that invoice is going to generate accounts receivable. And then maybe 30 days later, we'll receive payment from our customers. I'm going to ask you a question. You just received an invoice from a vendor. Should you record that amount that they say that we owe into QuickBooks based on that invoice? No. First off, did we requisition that merchandise, right? Okay, well, looks like we looked at our purchase requisition. Yeah, we requisitioned it. Should we record it as a liability? We got the invoice, said that we owe it, and we got the purchase requisition. Should we? No. Did we order it? So we give that purchase requisition to the purchasing department. Then the purchasing department orders the merchandise. Okay, we have an invoice. We've got the requisition that we did requisition it, and looks like the purchasing department did order it. Shall we go ahead and book this as a liability? No. It's almost humorous. I did that on purpose. The last thing we have to check, did we receive it? See, until we receive it, we don't even owe it. So now we would record the liability. We've got the invoice from the vendor. We did requisition it. The purchasing department did order it, and we received it. And as accounts payable clerk, you'll take all of these documents and like staple together and file them away as proof that we do have a liability. Now, in your book, they focus in on the invoice, and then that we ordered it and we received it. I put that purchase requisition in because I just want to make kind of humorous, because we just keep going and it's not a liability yet. But purchase requisitions are for bigger companies. And so if you're a smaller company, you may not have a requisition. Matter of fact, you might even have a purchase order system. But in the book, it goes invoice, you order it, purchase order, and you received it. So at least these three are evidence that we now have a liability. Now, the following is the types of transactions that that we can enter in QuickBooks when it comes to inventory. And so let's talk about vendors first. I said that before we start, how to start the process is we create a purchase order. And that's simply, we just give an order to the vendor that we need this merchandise. And so once they fill it, they'll send us a bill. Now, we're going to, if we receive the goods, we better check that first. If we receive the goods, then we'll enter that bill as a liability. That's accounts payable. And then once it comes due within, let's say, 30 days, we'll use pay bills to pay that bill. That's the vendor side and accounts payable side. On the customer side, on the accounts receivable side, what we're going to do is we're going to sell the merchandise inventory to our customer, and we're going to invoice them. And that's going to generate accounts receivable because they're going to pay us later. Okay. So eventually, in like say 30 days, we should receive payment from them. So we'll use the receive payment form to record that our customers did pay us that invoice. Now, if we receive the payment and put it to undeposited funds, or what we call now payments to deposit, we'll need a separate bank deposit, right? Because we have the money, but it's not in the bank yet, right? It's just we have it on site. But when we march it to the bank, that's when we make the bank deposit. Now, if you don't want to do that and receive payments, you can say that it's going right into the checking account, and you don't even need a separate deposit. I think for ease of use in this chapter 7, that's how they do it. We're going to receive payment and put it directly into our checking account, and just kind of forego the undeposited funds thing. Okay. Now on page 327, you need to make sure that your inventory tracking is on. Okay, so it's easy to do. You would just use the gear icon, go to account and settings, go to sales. So you're right here to sales. And then look down here to products and services, and you just got to make sure that track quantity and price rate is on, and also track inventory quantity on hand is on. So just double check that. When I did, it was already on, but in your setup, if you didn't do something quite right, it may not be. So in order for you to do the chapter transactions and make it work, you need to make sure that inventory tracking is on. So just food for thought there. In this chapter, we are going to develop a products and services list, right? And how do we get to the product and services list? Well, we go to sales, and then there'll be a bunch of tabs here. You go products and services. Matter of fact, here's where the tabs are. It's going to place you right here to products and services. And then just click on new, and you can go to town and put in your product or service. Now, the first thing you have to do is determine, well, what are we entering in the products and services list? Of course, if it's a service, we're going to choose service, right? I think we've already done that. But this time we're going to be putting in inventory items. And so we're going to be clicking on this one. And what is inventory? Those are the products that you buy and sell, and that you track the quantities. You track them coming in, and you track them going out. It's kind of like a perpetual system that you learned in Accounting 4A. Now, what's this non-inventory? These are products you buy and sell, but you don't need to track them. For instance, if you bought some nuts and bolts used in an installation. Now, I have a couple students that their family has a business, and one of them is a installer of flooring. Well, you would probably use non-inventory, because you'd buy it, right? But you don't need to track it. You know it's going to be associated with that one job. But what you would do then is that you would buy it and then associate it with that particular customer job, like flooring and things that you would sell that customer. That's my suggestion. Service, I think we've already done that. That's like if you're a lawn mowing service, right? You don't give a guy a product, you provide him a service. And notice here with a service, you just need like a sales revenue account or something. You'll notice here with inventory, not only do you need sales, but you need a cost of goods sold account, and you need an inventory account, because you're accounting for that inventory coming in and going out. But service, no, you're gonna see that all you need is just a revenue account. And then this bundle thing, well, I've never seen that until QuickBooks Online, but this is just a collection of products and services that you sell together. Example, a gift basket of fruit. But definitely this chapter's focus is on inventory, okay? So once we choose that we're going to enter an inventory item, comes up here, inventory, let's put it in. Now, this is on page 331, and what we're doing is we're putting in organic dog food, right? So put the name in, and you can put in a code. We don't have a code, leave it blank. You can have a picture here of it, of maybe the bag of dog food, I guess. We don't have it, leave it blank. But we do need the category, which is pet food supplies. And they're going to ask you to, put in the initial quantity, which will be 0, the as of date, which is going to be, I think, January 1. And in this time, they want a reorder point of 1. But I think there's another chapter exercise, the EM exercises, where the reorder point is going to be 0 as well. Just follow the directions. Now, notice that when we have inventory, we need 3 different accounts. We need an inventory account, right? Because it's an asset, we're receiving the asset. So we're going to set up the inventory asset account, right? And I think we need to put it. It's funny because I think that we have a number associated with it, but it's not here, but it should be. In fact, look at all of these. This is from the author. I guess they did this before we put in the account numbers. Okay. But anyway, we have an inventory asset account, and also we also need a sales account when we sell it, right? For instance, when we sell the inventory, we got to make sure, well, it's sales of a product. So that's why we need that here, the sales of a product. We also need the cost of goods sold, which we'll put here, and we'll even put how much it cost us, right? So again, we have an inventory account so that when inventory goes out, we can record it. We also have a cost of goods sold account so that when the inventory goes out, we can expense it to cost of goods sold, right? So you should recognize these entries from accounting 4A, right? So these three accounts are needed, and that's why we put them in. Now, if this was a service item, you wouldn't have it. All you would have is an income account. You wouldn't have the inventory asset account. You wouldn't have the cost of goods sold, or no inventory asset, no cost of goods sold. All you would have would be the sales, right? Okay. Now on page 332, they want you to update the chart of accounts. Here we go. On page 332, this is when they want you to add some of those numbers, right? Like the inventory asset 1,300 and cost of goods sold 5,000. They want you to do purchases for 50/50. Now I did it myself, and I found it to be difficult to go through all of the pages. You know, the chart of accounts is very long, and now you can go through each page by clicking next at the bottom right hand corner. However, to find the account you are looking for, try using the filter. That way you can quickly locate your account and add the desired number to it, right? So use this filter field here. So what I did, I'm looking for purchases. I put in purchase. It comes up, and then I'll go ahead. I think I have to hit the edit button to get into this batch thing, and then put in my 50/50, and I'm done. Just food for thought. I went through it. I said, man, this is crazy. I couldn't even find the purchases. There's so many pages of scrolling. I'm thinking, is it even there? But if you use this filter, oh man, it really helps. Food for thought. Okay. Let's go ahead and talk about purchase orders. This is on page 335. And a purchase order is a record of an order to purchase products from a vendor. How to get to it? New purchase order. Isn't that great? It's easy. I like to push the easy button here. All right, this is a purchase order. So what you need to do, well, who is the vendor that you're ordering from? Well, you're ordering from the vendor Only the Best Dog Food. And number 5, you're going to leave that blank. But if you were going to ship this directly to your customer, you would put ship to, but you're not. It's going to go to your business, Mookie, the Beagle Concierge, you know. So leave that blank. You need the purchase order with the date that you are ordering it, which is January 2nd. And then you go down to item details and put in what you're ordering. So in this case, it's that organic dog food. Now, your description should automatically pop up if you put a description in your products and services list, right, with the dog food. So the next thing you need to do is put in the quantity. In this case, you're going to put in 4. Now, the rate should already populate because you put the $25 rate in the products and services list. So basically, when you put the quantity of 4, it's going to multiply it by the rate, and QuickBooks is automatically going to give you an amount of $100. Okay. Now, if you were going to associate this dog food with a customer or project, in other words, you're going to pass this cost on to them, then you can put your customer or project name here. For this one, you're going to leave it blank. And this number 14, well, this is where you can kind of control the lines. You can add a line, or if you want to use the trash can, you can actually delete this line if you want. The message to vendor, that's just maybe if you want to say a few words to the vendor, have a nice day. We appreciate working with you. Hope you get this to us soon. You can put a memo here and explain why we're ordering it and things like that. And I like this feature where all the physical source documents you can scan and you can put them all right here. Which will support the reason why you're putting in this purchase order. And then finally, you just hit save and close. And that's it. Okay, now we ordered it and now we just received a bill. Let's assume that we've received the product, right? You don't want to enter the bill until we actually receive the products. So what we'll do, we're going to enter the bill. And how do we do that? New bill. Remember, the bill form is used if we're going to pay it later, right? If you're going to pay it right away, then go ahead and use the expense form. But if we're going to enter as a liability and pay it later, that's when we use the bill form. The bill form will generate an accounts payable behind the scenes, okay? So what does the bill look like? Well, who's the bill from? Well, only the best dog food. And if you entered only the best dog food in the vendor list and included the terms, this net 30 will populate automatically. And just as a practical matter in real life, you should do that because you don't have to mess around. I mean, you want things to populate automatically. So when you choose the vendor, the mailing address is going to pop up, terms is going to pop up. It just makes life a lot easier. Now you are going to need to put the bill date, right? That's the date of the bill. In this case, it's January 3rd. Now, because you have the terms net 30, that means you owe it in 30 days. QuickBooks will automatically calculate the due date. So what's 30 days from January 3rd? Well, that's February 2nd. Okay, so this automatically calculates for you when you have the terms and you put in the bill date. Next thing you do, you want to gaze over here and see if there's any open purchase orders, and there is. So in our work, I've done them all. If when this happens, you just hit add, and it will then take this purchase order and put it into the bill, right? So that's all you have to do. And if you want to see more like what this purchase order is or what's a source document and stuff, you can use this button here, and you can see this and actually drill down to see the actual purchase order. Okay, in this case, it's for $100, and that's the only one we want. Okay. Now, in this one, you would actually, save, right? You need to save it. There's more to it. There's like 16, 17, and maybe 18, but that's kind of self-evident, right, when you go through it. But yeah, you say, well, Toucher, where's the save? Well, it's down here. I just didn't include it in the slide. It's not part of that graphic. Okay, let's go ahead, and now we enter the bill and assume that it's some days later, and now we want to pay the bill. Okay, so we use pay bills to select the bills that are due and we are ready to pay. If the bill has been entered using the bill form, then the bill will automatically appear in the pay bills list. Okay, so let's try that. We go new, pay bills. And what do we see? Well, looks like it's the one we can see that QuickBooks has located one bill that we may want to pay, right? It keeps track of that. So all we need to do is just check the bills we want to pay. In this case, there's only one bill. So we check it, and then I guess before we move on, we got to make sure, well, how are we going to pay it? Looks like we're going to pay it with a credit card. And so put that account 2100 Visa, and you need the payment date. Got to put that in. Okay. And once you select the bill you want to pay, a payment should come up to $100, and that's what you want. I guess you could pay less, and it would keep track of that, I believe. But no, you're just going to keep it. You want to pay the whole bill. Okay. So then simply save and close. So that really concludes the vendor side, creating the purchase order, entering the bill, and paying the bill. Let's now go on to the customer accounts receivable side. We use the invoice form to record sales when the customer will pay later, right? So you're going to invoice the customer, and the customer says, I'll pay you later. And this invoice is going to create an accounts receivable behind the scenes. Okay. Well, let's take a look at what the invoice will look like. Okay. This invoice is to Sandy Copper for Remy, right? Notice that all this information popped up because I think that we must have entered all this information in the customer list. So we included Sandy's billing address and the terms. Now, what we need to do, though, we need to put in the invoice date. And notice that if we put in the date of 1/8, then we know it's going to be due 30 days from now. QuickBooks will automatically tell us when Sandy needs to pay us. Sandy needs to pay us by February 7th. Okay. And so what are we selling her? Looks like we're selling some dog food, right? Now, this description should pop up automatically because we put the description along with the product in our product services list. So that should come up automatically. We do have to put in how many bags we're selling. So in this case, we're selling her 2 bags. And this rate, it should pop up automatically because we put, that we charge $70 a bag. So that'll come up automatically. And then QuickBooks, based upon what you put in here as quantity, will multiply it by the rate and give the amount of $140. So notice here that the balance due on this invoice is $140. Now, what's really kind of interesting is if you are selling merchandise to the ultimate consumer, you're supposed to be charging sales tax and collecting sales tax. And we do that all the time. We go to JCPenney's, and we buy a shirt. We pay what? The sales plus tax. It's interesting that the author didn't include sales tax here. Now, if you're selling wholesale to another retailer, you don't charge a retailer sales tax because you only charge sales tax to the ultimate consumer. So if you're a wholesaler and sell it to the retailer, well, the retailer will collect the sales tax from the ultimate consumer. So I don't know. If it was my book, I would include the sales tax, but they didn't, and that's okay. Maybe it's because the author didn't want to blow you away with complexity. But anyway, guess what, though? In EM 7.12 on page 363, the author does have you set up a sales tax item. How interesting. So in chapter work, they didn't even talk about it. All of a sudden, they make you do it. Now, it's pretty easy to do. I mean, it's not really that hard. So maybe that's why she did it that way. But anyway, you're going to be setting up this California Department of Tax and Fee Administration, and you're going to put in a 9% tax rate. Now, one thing that the book did not really emphasize, and I think that you need to put this in the memory banks, and I don't care what computerized system that you use, you should keep in mind that products are taxable. So inventory is taxable. Services are not taxable. Okay. Now, there are some times when the products are not taxable. That's if you're a wholesaler selling to a retailer. But most of the time, you're going to be selling your inventory to the customer. You need to charge sales tax. Now, here, I give you a partial invoice. And no, this is not EM 7-12. It's one that I just wanted to share with you so you see what I'm talking about. So this is partial invoice. And when you're going to put a line item for like this one, a large hammock, you're going to put it in a quantity of 1, and the rate should pop up automatically. So the amount's $500. Because this is a product, right? You need to check that tax box. That's taxable. Same thing with the dog food. You're going to check it as taxable. But notice here that the pet care errand, that's a service. We're going to leave it blank. Why? Because we don't tax services. So when you do these exercises, especially the ones that are after 7.12, make sure that be careful about checking the boxes that you need. Now, as a practical matter, you can designate which items are taxable in your products and services list. That way, QuickBooks will check the boxes for you. Now, the author chose not to do it this way. I suggest in real life that you do that because you want to have QuickBooks do things automatically for you. You know that when you sell one of those large hammocks, it's going to be taxable. So why not just have QuickBooks check it for you? Okay. Now, if there's ever come a time when you're going to sell a large hammock and you're going to do so wholesale, then you can always take it off, right? You can always override the checkbox in the form. And also, I want to show you what an invoice would look like with sales tax. Now, I didn't give you the whole thing. I just want to focus in on what this bottom right-hand corner will look like. Here, we have a medium hammock, and we're charging the customer $400. It's taxable. Notice that the subtotal before tax is $400. And we don't have any other items that aren't taxable. We don't have any services. So the whole 400 is going to be taxable. And what's 9? We're going to charge 9% tax. What's 9% tax on 400? $36. So we've got a subtotal of 400. The sales tax on that merchandise is $36. And our invoice total is now $436. Okay, perfect. Now, finally, we're going to, receive payment from our customers. Now, customers can pay using a credit card. They can pay online, or they can use a customer check. So all that works. Let's just try it one. Let's see how our customer paid us. So we're going to go new, receive payment. And it looks like Sandy Copper for Remy, it's the Remy project, paid us. So the payment date was January 10. Put that in. How do they pay us? Credit card. And are we going to deposit to undeposited funds or payments to deposit? No, we're going to put it right into our checking account, which means we don't have to do that separate deposit. Isn't that kind of nice? So we do that. Now, QuickBooks keeps track of our outstanding invoices, and it knows that eventually we're going to want payment on those. So it has a list of those unpaid invoices. And so we have to check, well, which is this payment for? And for this one, it's for invoice 1010, right? For $140. So what we do is we just check the box. That's the one we're paying. These other two, we're not paying. They're still open. I mean, the customer's not paying. They're still open. We're going to get them later, but right now the customer is just paying us for the 1010. Okay. All right. And then we'll hit save and close. Okay. This is just to remind you that if we did use undeposited funds, now called payments to deposit, and we didn't, put directly into our checking account, we'd have to create a separate bank deposit to transfer the funds from undeposited funds to the checking account. But I went through all of the exercises, every one of them, and you don't have to do that. They made it easy. They're going to deposit right into the checking account, so you don't have to do that separate step. All right. And then the accounting essentials, inventory is one of those main targets of fraud and theft. So we do need a good system of internal control to safeguard our inventory. And we kind of learned about that, how to safeguard assets in accounting 4A. Now, we are on a perpetual system, right? So we track inventory coming in and we track inventory going out. So you say, Tetra, why would we need a physical inventory count? Because if we on a perpetual system, well, there are certain things that could happen that we don't know about. For instance, theft, right? And spoilage, and maybe even obsolescence. So we have to make sure that what we have in our accounting records and what's in QuickBooks is confirmed by a physical count, right? So even if we're doing perpetual, when in theory we're supposed to know how much we sold and what's in the inventory at all times, we still need to do that at least once a year to make sure that that's something to get by us, like theft or spoilage and the like. All right. Okay. I always talk to you about these videos. You can go here on the website, but also in the chapter module, in like chapter 7 module, I do have those videos. And be honest with you, I was kind of surprised that the author didn't spend more time on sales tax and creating that sales tax item. So I actually went and for the first time and used that. So, and got a better sense of what's going on. Well, it's pretty much what the book says, but as a resource, you can always go back for enrichment and get maybe a little more detail than the author's given you. Okay. All right. Well, that does it for me. How about that? So enjoy the chapter 7 inventory. And for now, study hard. See you soon. Bye-bye.